the Scam-Demic, $1 trillion in global scams, $3,000 for the average victim.
The fraudsters adopt new technology faster than anybody else. The volume of fraud and of cybercrime is skyrocketing.
Everyone wins when we have companies and networks that are fighting fraud, and so this should be a moment of celebration for everyone in the fintech ecosystem.
Heck yeah. The year that the fraud fight back begins, the industry is mobilizing. The dam has burst. Collaboration is starting to happen.
Well, Simon, I'm really excited to have you here in the flesh, out of the UK. We were just talking about the difference between UK cynicism and American optimism.
Yep.
I think that's a good lead in, because today, the thing I'm excited to talk about, you and I have talked a lot about the Scam-Demic, $1 trillion in global scams, $3,000 for the average victim. And so I feel like we're talking about all these bad, negative things. But today we have some really exciting news. You're at Sardine, and they just raised a big round to fight
scams.
Fraud.
To fight scams and fraud and all of those kind of attacks. Yeah, so $70 million led by our friends at Activant Capital. Andreessen, Nika, and all of our friends got back involved. And yeah, it's time for some good AI.
Yeah, I think this is a great story to dive in, because in this ecosystem, everyone wins when we have companies and networks that are fighting fraud. And so this should be a moment of celebration for everyone in the fintech ecosystem. Which is great, not just Sardine and the investors in Sardine, or not even just the customers of Sardine, but the whole ecosystem.
Well, look, there's a real meaning and purpose to why I joined the company, and there were many other companies, Alloy, Unit 21, Persona, like all doing great work. Keep doing your job, guys. We need many of these players in the market, and we need people trying different things to deal with this, because frankly, the fraudsters are trying all of this stuff. They adopt new technology faster than anybody else. And the volume of fraud and the volume of cybercrime and the volume of all kinds of anti-money laundering and criminal networks is skyrocketing.
Yeah.
Because what happened when AI came along is it just made doing scams so much cheaper.
Yeah.
Incredibly cheap to perform scams at scale. And this is why you see the headlines.
Yeah, and the founders of Sardine are pretty battle-testing this. Soups and Aditya coming out of Coinbase and also Revolut, fully digital platforms where they had to experience this at scale before a lot of other institutions did.
Yeah, and the experience they had doing that, so Zahid was PayPal and Uber as well.
Yeah.
And this is, at scale companies with lots of attacks. And they had this challenge of like, well, this is fundamentally a data problem, but I can't get the data I need. What are the reliable data sets? And the most reliable turns out to be somebody's device and how the behavior on it. Now, there's a lot of companies that have been doing that historically, but you couldn't get the R&D in that space. So that's Sardine's real superpower, is the device and behavior.
Give people some stats on like the scope of the network and coverage in terms of devices and other.
Yeah, so 2.2 billion devices, 250 million end customers across 300 corporates. Some very, very large companies you may have heard of, like Coinbase and Brex, but also FIS, Ascensus, X, we just won those guys, GoDaddy. And so the more devices you see, the more bad actors you can start to see in your network. But also, most importantly, you can see the consistency of what does a bad device look like and what does a good one look like. And that's your baseline. Like if somebody's coming to you cold, brand new, how do I know this is a good customer? And I want to convert that customer as fast as I can. I want to get them in the fast lane, and I don't want to give them any friction. Versus, I'm not so sure if this is a good customer. I'm going to put them in a slow lane, add a little friction, and maybe they get through anyway, and I learned because I added friction, or maybe they don't. And so always retraining and looking for that behavior as kind of the baseline, and with a lot of devices, you can make a big difference.
And what are some of the trend lines in fraud that you guys are tracking and trying to help abate that are going on right now?
I mean, the big one is scams. The scam velocity has dramatically increased, especially with real-time payments. FedNow, but yes, Zelle, Cash App, and Visa Direct. It's now possible to move money almost instantly, and that's a global phenomenon, right? Like it's not just in the US, and the fraudsters are global. So the same criminal network that's targeting users in Brazil on Pix, are targeting Zelle and Cash App, they're targeting people in the UK and elsewhere. So that's a huge area. And the thing you have to do is to try and detect a scam before the payment, before it happens. So you're looking for things like, is this person taking a screenshot to send it to somebody? Are they acting panicked? Are they suddenly doing things, large transactions that they wouldn't do before? Is this person over 70 signing up for a crypto account that they've never had in the past? All of these signals that you can see before anybody even moves money become really, really crucial. Or have they always been just a regular customer that's doing things and then suddenly they're doing one very large payment? It's looking for those signs of a scam. So that's one big area is the scam
Scams is a big area for sure.
The second area is B2B. B2B payments are high cost of failure.
Yep.
If I'm going to go send $1 million to somebody, I want to be really sure it's the right somebody. But a lot of the controls we have around sending $1 million are actually a lot weaker than they are for sending $100. Because when you send $100 or you make a payment online, we're using the card rails typically, and there's a bunch of fraud checks built into that. But if you're sending a wire for $1 million, fraud checks aren't there. So how do you
check? There's a lot of check fraud. A lot of payments are moving from paper-based payments to online payments, which opens up new fraud vectors that banks have to get comfortable with and fintechs have to get comfortable
completely. So that would be that B2B payment space is another big area. And then I think the third one is people still just wrestling with the complexity of compliance. Like it's just really hard to do the job well because you're in that constant battleground of like friction versus kind of dealing with the risk. And your failure mode in compliance is multi-billion-dollar fines. That you have to get it right, and they can shut down or stop you from doing business if you don't get that right.
Yeah, so we saw Zelle volume scale and then fraud scale commensurately alongside that. And so I think this is exciting. Like, Sardine's doing great work. There are a bunch of other companies doing great work too. But I think there is some bad news about how the industry is hamstrung in their ability to fight fraud. So why don't you talk about why, especially I think for big banks, using new AI models and new tools generally is difficult?
Completely. So let's take an example, deepfakes onboarding. We all know it's happening. If you speak to any fraud professional, deepfakes are coming in. There's a lot of good solutions there for detecting deepfakes. I'd like to switch that on, please. Okay, great. Can you explain how that AI works? No, I can't.
And here, this is you, as a regulator, maybe asking this question to a bank or a fintech.
Yeah, so as a bank or a fintech company to my bank, I have to be able to explain how the AI works. I've got to explain how it's not got any bias in it. I've got to be able to show how I'm managing data privacy. And I have to do all of this before I can go live. The fraudsters don't have to do any of that to use the deepfake, but you do as an institution. And then you've got to figure out, okay, so what happens if a customer complains? What happens if there is proof of bias? How am I going to constantly test this? How am I going to make sure that humans are in the loop and giving it oversight? And you need to have processes, procedures, and controls in place before you can even go live.
Yeah.
And then you need to be able to take that proactively to your regulators and show them how you're doing it.
Yeah.
And that's before you've even thought about the use case. Maybe there's AI and deepfakes, maybe it's some other use case. So the institutions, especially the big banks, are aggressively trying to adopt AI.
Yeah.
But I think one of the reasons you've not seen much happen in that space, or where you have, it's been in customer service, is you're kind of looking for that space where I'm not going to get hit on the hand for doing it wrong.
Yeah.
And this is where I think partnering is going to really make a difference, is having come up in, at Sardine, and I'm sure many of its competitors, in having to build machine learning that is explainable, testable, compliant, then AI agents are very, very familiar battleground for us. You can show exactly what data it used, exactly what screens it clicked. So for example, let's say I build an AI agent. That AI agent's going to look at this alert that's just happened. Oh, it looks like a bad transaction has happened in your system, bank.
Yep.
I will go look at that as an agent rather than as a person doing it. So what Sardine does is we log the fact that
I think this is a good place to back up too. You guys started out more as an API for on-device intelligence, other fraud screenings, but now you can actually do agentic offerings.
Correct.
So like talk through a little bit about how the Sardine product suite has evolved over time to take on a little bit more of the workflow.
So I mentioned the device and behavior. I think of that as the T, like the I in a T model, right? Like that's the proprietary superpower of Sardine. And then around that, we plug in 40 different data providers, because all risk problems are data problems. I need more data, I need better data, and that helps me make a better decision about risk. And the data scientists know this well. Above that, we stick a platform. Everything from helping you do documentary KYC and onboard a customer, to convert them and all of the background checks, to them actually making a transaction, money in, money out, to customer service. Like every single customer touch point is viewable in the platform, and that's something that you can then take and put into your product in two ways. One is with an SDK that you plug into your mobile app, and two is with some JavaScript that goes into your website. And then on the back end, your fraud, your compliance team get this dashboard where they can manage the cases that happen as they happen, but they can also see how the AI is performing, create new rules, create new machine learning models, and test them. So when you have all of this data, you're essentially a fraud and compliance department's back end or system of record. And
they're logging into Sardine, they're seeing what you guys are spitting out, your fraud scores, your risk scores, flagging various transactions, users, all of that.
That's all happening inside the Sardine platform. So historically, what a lot of our clients did was work with a couple of offshore folks to help them run that at scale. Now we can just give them the agents instead of offshoring it. But what we do is every single click that agent makes, every data point that agent uses, we can give you a full audit trail of that. And essentially, your smaller team now, can focus on, that's a scary looking pattern coming out of this part of the world. Maybe I should go investigate that, rather than just dealing with the this looks suspicious, can you go check them out on Google type of requests that tend to bog you down.
And it's going to be an interesting area for companies like Sardine, because the areas that tend to evolve the fastest are where there's this really competitive environment. And fraud is this incredibly competitive environment where you have agents fighting agents. And so the extent that AI gets applied anywhere in financial services and evolves quickly, this is ground zero.
Completely, because in this industry, this segment of it, your biggest competitor is the bad guy. Because they're moving a lot faster than anybody else in the market, which is why I welcome everybody else in the market completely, because we need more ways to do that. One of the things that Soups does a lot.
And this is I think probably the most important question we have here is it's good AI versus bad AI. You've already said bad AI has an edge because they don't have to get any sort of compliance sign-off. But what is good AI supposed to do, and how are they going to win?
I think ultimately we can collaborate. We can see more of the picture. And so through initiatives like Sonar that Sardine has, I know Plaid runs Beacon, there are some others as well. It's how do institutions share as much data as possible? So one example is there's a tier 1 bank that's worked with all of our crypto exchange clients to identify wire fraud, and they were able to correctly predict it in, I think, 42% of cases. Why? Because they did a back test and looked at the transactions that were happening on the crypto side and all of the signals that they had in the Sardine platform, sent those to the bank, which would have meant they wouldn't have sent the wire because of that collaboration. Now, that institution is not a Sardine client, but it is collaborating. Why? Because the more data you have, all risk problems are data problems. So the more data you collaborate on, the more effective you can be in preventing that. But you've got to do it in a way that's super privacy assured, right? And that's been a big
it's not an easy problem to solve. Bad AI is always going to win the speed of adoption game. And so I think it's going to be the network and the partnerships and the data sharing that give good AI a chance to actually fight back.
And the Sonar model is one where there's an incentive mechanism baked in. So the more data you share, the more you get paid. And it's set at quite a nominal fee, but it's the idea of how can we incentivize the network participants from as many industries as possible? Because I think something like...
To your point, B2B payments is a big area for fraud, and B2B payments impacts everyone. If you're Tesla or SpaceX, you don't want your wires getting routed to a fraudulent account, right? So it can be way broader than just thinking about banks.
100%. And so into that network, the direct competitors to Sardine are welcome to join in. Because it will enhance the fraud protection that they're going to get. But it will enhance the fraud protection we can give. as well. So really it's about creating that incentive mechanism, that shared space. So the way we fight back is with network effects. And I think the way we fight back is by talking more openly about how we're fighting back. There was this big taboo in the industry for a long time, which was don't give away how we detect things because the fraudsters are watching us.
And if you don't talk about, like, the reality is they probably already know.
Yes.
And you not talking about it means just other people don't.
Yes, exactly. So you don't give away all of the secrets, but I do think there's a sort of a priority, a privilege that we have to share the stuff that's working and the stuff you should be doing.
Yeah. How are these partnerships and networks working with you and with banks? So I know you guys have FIS, which has like 80 plus banks who have over 10 billion in assets, but I'm curious what it's like to try and bring banks into networks like that, because they tend to be slower moving and they have more onerous regulatory requirements around, for example,
so I think
data sharing.
It might be less than 10 banks as clients now, maybe a little bit more. So Europe's largest digital bank, so second largest digital bank, Bank, is a client, and we have kind of countless sponsor banks as clients as well. Typically that partnership is driven by a use case first. There is something Sardine can do that the rest of their tech stack can't, and it's usually that one particular problem that we go solve. But a lot of it is just being able to go through the journey with them and understand their compliance headaches and hurdles that they're going to have to get through. If you understand the process on the bank side, then you're going to get a lot further in solving those problems. And it's going to take them multiple years to get things to production. But I think the flip now on partnerships is realizing that some of these infrastructure fintech companies can actually be an accelerant for you over time. Because if you think about what your intellectual property is as one of those institutions, it's about your brand, it's about your customer trust, it's about your pricing power, it's about your networking effects, classic 7 power stuff. One of those promises you make to customers, though, is that I will make you whole, I will protect you from fraud, and that trust that you build, where you can do that better.
And Sardine in particular, I think, has some payment models where you basically indemnify against fraud losses for funding accounts.
For merchants, for instance, that is one model. But this partnership model is becoming much more common. I think Citi partnered with Navan. Navan also partnered with Brex. You're seeing it now where JP Morgan partnered with Gusto. I think there is a broader realization, even among some of the biggest banks, that do what you're great at and then partner with best-in-class third parties to really help you strip out what that back office used to look like. And that incumbent legacy.
And that's the story of some of the biggest, platforms in the world. It's the story of Visa being spun out of the big banks. It's the story of FICO and how we have a credit scoring network. And so we're probably at this era where we need to have some sort of new big effort around fraud.
Yeah, the cloud, internet, mobile, API, AI generation needs its FICO, its Visa, its whoever else.
And Zelle is an outshoot of early warning system, which was a data sharing network for the big banks, but a lot of people don't like participating or not allowed to participate in it because the big banks control it, and therefore there's kind of this, so there are incentive issues to work out.
My good friend Alex Johnson of Fintech Takes always talks about, like, there's this sort of weird structure where everything in the market wants you to build an open loop network, but there's almost like this angel devil on the shoulder whispering, close the network. You get to take more of the economics all for yourself, but then you limit the impact of that network. Whereas actually what you want is lots of little figures of 8. So you've got like the network in the middle, but then lots of little networks almost in a constellation around the sun, so that there's always this open platform for data sharing where there's a good incentive mechanism, but you can grow your business and then compete on whatever it is that you're great at.
Yeah. Is there a thread to pull on here too in terms of how Sardine supports TradFi versus DeFi or crypto? Because a lot of times those platforms and areas see some of the earliest adoptions in fraud.
Yeah, the classic line in Sardine is if you grow up in a bad neighborhood, you learn a few tricks. And a lot of our clients are gift card networks. It's high risk.
And Soups was at Coinbase for a long time.
And a lot of these spaces. But now, especially in crypto, generally the scams start or end in crypto because it's an irrevocable payment type. And good actors like Coinbase have spent a long time getting really, really sophisticated in how they deal with those sorts of problems. But the institutions are on the other side of it, and they're flying blind. Because what does it look like to them? Customer moved money, customer complained. Like, they don't see everything else. And so what the bad actors do is they hide in the shadows between institutions and between payment rails. So
which again comes back to why you need networks and
you need
collaboration.
to peer into the black holes, right? So if I start a transaction with Cash App, and then I move another one via crypto, and then I move it via FedNow, and then I do a Zelle transaction, that's an anti-money laundering, that's layering and placement, right? So that model of like moving money between different rails is well understood by financial crime professionals. And yet, there's no network that gives you the ability to peer into those black holes. So you need to be multi-rail and multi-industry in order to make a difference.
Yeah, I just hosted Zach Prey from Plaid, and his big prediction was that this was going to be the year of fraud, where it becomes a hot topic issue. I think that's already come true, and it's just February. I'm cautiously optimistic, though. I would love to hear what you think are the things that we should be paying attention to for Sardine, but also just for fraud more generally for the rest of the year.
I think it's actually the year that the fraud fight back begins. Like, so under the surface, last year it's becoming the biggest issue. Under the surface this year is the industry is mobilizing to really get its act together. And there's been a lot of people working time to deal with it. And the collaboration is starting to happen. And that's exciting because a lot of the taboos have broken. The dam has burst. It's now no longer the case that you can just have pointy elbows and be competitive about everything. And what's really impressed me is how some of the largest financial institutions are at the table talking openly with people that they would have maybe written off for being too small, maybe would have seen as competitive. That spirit has really, really shifted. So yes, that's going to be a big issue. And then figuring out what data sharing looks like when 1033 or something else, FDX, what's all that going to look like? Yeah,
it's going to be an interesting year for sure. I guess also full disclosure, in case you didn't catch it, works at Sardine. I'm also an investor in Sardine, but hopefully as was clear from the conversation, we're very excited about everyone who's working on fraud in fintech.
Heck yeah, keep doing the great things, people.
Yeah, and I'm also happy to have you here from the UK in person.
I know. We'll have to do this again sometime. Maybe I'll just come back every other week.
Yeah, and I kept you talking enough. You weren't able to get too much through your
I
your
know.
Pepsi.
Look at that. That's the move here. I got to get you talking more.
And hey, maybe we do our next live one at FinTech Meetup or something if we can find space
let's
and a
do
videographer.
That. Well, I mean, if you're at FinTech Meetup, come find us. Come be in the background. We'll find somewhere cool to do it.
It'll be awesome. Cool. Well, that's all we got today. Thanks for coming in.
Thanks for having me, Rex.